I'm Matt Bishar with NAREIT's REIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Senior Vice President of Research and Economic Analysis. Calvin, thanks so much for joining us.
Thanks for having me, Matt.
Now, I'd like to start by talking about the economy. What's the latest developments that you're seeing?
The biggest news that we had was that overall economic growth, GDP growth, slowed in the fourth quarter from a 5% pace in the summer to 2.6% in the fourth quarter. Now, despite this slowdown, the important thing is the economy was strong where it counts. Now, when I say it's strong where it counts, the consumer really stayed in, and in fact, the consumer accelerated. Consumer spending accelerated 4.3% growth rate. Now, that's the fastest we've seen in years and years. That is by far the fastest that we've had of the recovery. Now, if we only had 2.6% overall, obviously some other areas were weak. Some of them are not surprising. The foreign economies, our foreign trading partners, did not do very well. Our net exports subtracted a full percentage point from GDP growth. So that was one big weakness. Another weakness was government defense spending. Government defense spending surged in the third quarter and moved back to its previous level. That's really more or less noise. One area that I will be keeping an eye on is that business investment spending really slowed. It was a big surprising pullback, people expecting some pullback. The reason why that's important is that is a very cyclical phenomenon. We hope that does not continue to be weak, and if business sales and consumer spending are strong, that's likely to continue to be strong.
And with that being said, what do you expect will be the biggest economic stories for the rest of 2015?
What we're really seeing is the beginning of a virtuous cycle, that we're having strong consumer spending, business sales. The business sales are leading to more hiring. We've seen very good job growth. One of the biggest stories in the fourth quarter was how much the labor market accelerated. And the more people have jobs, it feeds back into the stronger consumer spending. Now, that said, the economy is not getting much help from abroad, and we're not going to get much more help. Europe is still struggling. China is fairly weak. There's a lot of soft spots out there. Other things that have been on everyone's mind are the oil market, which is actually a big positive for most of the U.S. Overall, it's helping consumer spending go further, but it's going to have a big impact in the oil patch. Houston, some of the other oil markets are obviously being fairly weak. And then finally, the dollar strength has helped consumers buy. It's hurt the exporters.
And a lot of your research here at NAREIT focuses on the economic fundamentals and how they directly relate to the commercial real estate sectors. One area in particular that you've done studies on is multifamily. What are you seeing there regarding fundamentals, and what can we expect?
That's what's been really interesting. You know, multifamily was the star of the show last year. They did extremely well in the stock market, but people were worried about the impact of new supply coming along. People were worried that if the housing market improved, you'd see move-outs to buy, and was that going to mean the sector is going to flatline at a fairly high level? Well, we're not seeing that at all. In fact, the latest data show that in the fourth quarter, rental occupancy, the number of people who are in an occupied rental apartment, it surged. Over the past 4 quarters, the increase in rental occupancy was 2 million. Now, to put that in perspective, is 2 million a big number or small number? The long-term average is about 300,000. So this was a real surge of growth. And it's probably just the leading edge of it, because the dynamics of household behavior are very closely tied to the job market. Normally you have overall household formation when people go out to rent an apartment or buy a home, about 1.25 million a year. We had half of that during the recession every year, so there's a pent-up demand of, say, 3 or 4 million households that are waiting to move out of doubled-up places. We're starting to see the leading edge of this come forward with the multifamily. So should the job strength continue, we're probably going to see a lot more rental occupancy, keeping rental vacancy rates low with fairly good rent growth in the apartment sector. So overall, we're seeing a still more favorable development in multifamily for 2015.
Calvin, thank you so much for your insights.
My pleasure, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.